Hey, friend, welcome back to the Live Off Rents show, where we bring in real estate and other financial experts to help you build passive income, create your dream lifestyle, reach financial independence, all those good things that we all want in our lives. As always, I'm your host, Brian Davis, co-founder of Spark Rental, and I'm right there in the trenches with you guys. I'm in this journey too. And we are really excited to be joined today by our guest, Alpesh Parmar is an entrepreneur, real estate investor, business owner, author, mentor, podcast host who is passionate about wealth, life, and health. Alpesh is the host of the real estate investing podcast, Wealth Matters, co-author of the Amazon #1 best-selling book, Resilience, Turning Your Setback into a Comeback. So Alpesh, welcome to the show.
Thank you so much, Brian, for the intro, and thank you for having me on the show.
Absolutely. Well, we usually start the show just by asking people how you got into real estate in the first place. And then, from there we can learn about how things have changed for you, how you've scaled, what's gone wrong, and,
A lot.
yeah, and what you're up to now. So yeah, take us back to the beginning. How'd you get into real estate in the first place?
Sure. I'm pretty sure you and most of your listeners have heard the term called accidental landlord,
Oh yeah,
right?
I've been one at times in my life.
Exactly. So 2011 comes, and I had bought a property here in the San Francisco Bay Area back at the peak of 2006. And the property was down by 40%, but we needed to upgrade because we had a baby. So of course we didn't want to sell, and I also did not want to do short sale, ruining my credit. So we ended up keeping the property, and I became a landlord while we moved into a bigger house. And I learned the ropes of real estate investing that time because I was self-managing. And in 2015, when I was started breaking even, I sold that property. My wife says that I should not have because we would have doubled our money by this time, but I had my own ideas. So what I started doing is that in 2015 itself, I took that money, which I got from my property. Again, that was my down payment. And I started investing in out of state in real estate because I knew the numbers won't work in the Bay Area. California being a tenant friendly state, I didn't want to deal with all the chaos and whatnot. So decided, even though I did not learn, I didn't know about bigger pockets, I have no clue. I just started investing out of state. And that's where I, messed up as well, and which we can talk about later. But that was my start. So from 2015, single family to duplexes to 9 units, and then now, larger mobile home parks, senior housing facilities, and some shopping centers as well, retail shopping centers.
I too, when I first started investing in real estate, I did not get the expertise or the help that I really should have gotten. I was young
Right.
and arrogant and, didn't get a coach,
Yes.
didn't get a mentor, didn't get a senior partner. And as a result, I just made every expensive mistake in the book. So
Yep, we all
yeah.
do. And those are seminars. So that's
Yeah, so I'm curious. I always love to hear people's stories about how they scaled from the small properties, the single family, the small multifamily properties up to, the commercially zoned properties, whether those are larger multifamily properties or mobile home parks, retail in your case as well. So tell us about that transition because a lot of investors struggle making that leap from the 1 to 4 unit residentially zoned and financed properties up to the commercially financed properties, 5 units and above, and commercially zoned properties. So tell us about that transition and how you made that, how you scaled up to those.
I think it's important to know what you're looking for and what your goals are. For some people, they want to be in that high, net worth or highly paying W-2 job and just invest on site, right? Passively. And even though we say that, real estate is a passive investment, it is, but it's not, right? You still got to do due diligence. You got to put the effort in, right? Yeah. So when I started, again, my goal was passive, right? And then I realized that I think this is what am enjoying because at the same time, 2015, I was also doing a lot of stocks and options and futures just to try to figure out which way I should go in next couple of years. And then after trying it for a couple of years, I realized that real estate is the way I should go. That is where, I enjoy, because it's not emotional, not everyday drama, right?
Yeah.
There will be drama, but not, morning to evening, right? You are looking at the screen. So once I figured that out, I'm like, okay, how can I replace my income? And of course, being in the San Francisco Bay Area, my wife and I are very highly paid, and I have my own IT business as well, right? So I was making, and I'm still making income from that business. So it's not easy to just replace by buying one or two single family, or even it's not. You can't even think about it. So when I calculated, I'm like, oh, I got to buy over 120 single family or properties. I'm like, how the hell can you do that, right? So you have to go through due diligence on each property. Maybe you buy fourplex, you still have to go through, find the deal, work with the broker, due diligence, property manager, and all that. And then after 10 loans, you run out of those loans. So now you got to figure out, LLC or DSCR loans, etc. So I'm like, there has to be a way, right? And that's when I started. Actually, 2017 is when I started looking into meetups and Bigger Pockets. I think that's when Bigger Pockets was just starting. And 2018, I literally took off from my IT business. All my IT work stopped. I did not get a single penny that year from IT business because I said I'm going to learn real estate as much as possible. So I was traveling all over the US, attending every multifamily conference, you name it, right? Mostly they were in Phoenix, Denver, I'm pretty sure some of those, and Dallas, Austin area. So attended and pretty much built a giant network of like-minded people, or the people who were ahead of me in the game, or people who needed complementary skills, right? So, and that is how I got started. I started scaling up. I started partnering with those people, and then started raising capital as of like end of 2018. We started with apartment buildings, and then when I realized there is a lot of competition, I moved into mobile home parks and senior housing as of 2019.
So, if I understand correctly, you went the route of rather than going out and buying commercially financed properties directly under, yourself, you went the route of co-sponsoring deals with other syndicators to enter that space. Do I get that? Did I get that right?
Yes, yes, and I did both. Actually, I bought first two properties I bought on my own 9-unit properties. So I had to get a commercial loan, and that's when I realized that it's great, but you again still want to scale up, right? 9 units are not going to cut it, and when you scale up, you really need a team on the ground and team you can really trust, right? And that's when I was like, oh, if I want to buy 100 units, I don't want to do it myself. I want to have a partner. I want to have some, people who who I know and trust, and that is when I thought that syndication is the way to go.
Yeah, no, that makes total sense. And I love what you said about all of the time that you invested in networking. It's something that my co-founder Denny and I have harped on many times over the years, that real estate investing is a team sport. It is not
Yes.
a solo sport.
Yep.
You need, and no matter how you're investing, whether you are an active investor or a passive investor, you need a ton of other people on your team to help you
Yep.
get there and get things done. So I totally appreciate that. Now, I noticed on your bio on your Wealth Matters website, you mentioned that you've invested in a lot of properties overseas as well, and that is something I'm curious about as someone who lives overseas myself, but who has never actually bought or invested in any way in properties overseas. I see you've invested in Belize, in Panama, in Paraguay, in India. So how have you gone about those investments? And well, yeah, let's start there. How did those investments come about?
So that's a great question. So far, out of country, I have not invested in, or in India, especially. I have a property where I have tenant and whatnot, but the other properties out of country are mostly farmland, right? Except Belize. Also, Belize, it's a hotel, right? So we have a shared condo, and which is being constructed for last 4 years actually,
No,
because
no.
COVID hit, and yeah, so it's a long story, but anyhow, so that's there. And then Paraguay and Panama. Panama is the coffee farm. and then Paraguay is the orange tree farm, and those are turnkey operations. I just wanted to, because I was putting so much of my money into U.S. stock markets and U.S. real estate. I wanted to also see if I can, invest in other assets or at least other, currencies, right, which are not directly tied to. Even though we know that most of them are directly tied to U.S. dollars, but at least they are out of U.S. jurisdiction, right? So I met some of those people during those conferences, and then I continued the dialogue. I actually flew to Belize and Panama to check out their operations, and after that, I invested.
So you actively invested in these properties. You own these properties directly. These are not like overseas syndications. Is that correct?
So that's yes, I directly own the property, but the way they manage it is that they buy, let's say, Panama's example, coffee farm, right? They bought a 40-acre property, right, and then they subdivide it by the plot of half an acre, and they sell that to investors. But they manage the entire farm, so they are doing all the turnkey work, but the title is on your name.
Interesting. Okay. All right.
So
Yeah.
that allows me to get Panamanian passport as well, by the way. Yeah, I
Well,
have
yeah,
not done it,
I don't want
but
to
you
go
have to
too far down
show
a rabbit
some.
hole, but yeah, let's take a quick minute to talk about that. So, what are the rules in Panama for qualifying for a golden visa there or citizenship there by
So
investment?
I have not tried it. I think you still got to invest something more than I've been told that I need to put 500,000 or 250,000 in a bank account over there for a year, right? Because I already have a property there. So I just need to show and then stay, I think, 6 months first time to get the, pass the golden visa. But I was not interested at that time, but it's an option.
Wow. So, yeah, that I didn't realize that it was that easy for Panama. So you only have to hold money in a bank account there. You don't have to actually invest
Yes,
it
because I already have a property,
because you
right?
already
Even
own
though,
property there.
yes,
Okay.
yes,
Okay,
yeah.
gotcha.
So that's still considered, yeah.
Yeah,
But
I mean,
I think
so
you have to own that property for a certain number of years or something like that. I've already owned it for like, I think, 4 years now.
yeah, it's something that's always appealed to me. So my wife and I have been overseas for 9 years. Our daughter was born in Brazil, and she actually has dual citizenship.
Wow.
So yeah, our daughter, she's only 3 years old, but she's got two passports. And my wife and I would love to have a second citizenship as well. We do have a second long-term visa for Brazil, um, but it's not permanent, and we have to go back every couple years to.
Right.
Doesn't matter, but um, yeah, I mean, but that is another type of hedge against risk, right?
Right.
Having at least long-term residency, if not citizenship, in another country in
Yep.
case something happens in the U.S. And the
Yeah,
U.S. is obviously it's a
lot of
great
the
passport to have, but
big wigs talk about it, right? All the time that you got to have second, citizenship as well, a
yeah,
second
but a
passport.
lot of those golden visas are expensive. So
Yes.
anyway, I don't want to go too much down a rabbit hole, but I was just curious about that. Have you come across any syndications overseas?
Yes, I have seen some, but and that is one in Belize. Actually, we did the condo. It's through a syndication, right? Where we
Really?
acquired 16. I think there are 16 units of condos, and it's pretty much all of us have the same share. So that is through syndication.
Okay, so you actually don't own that condo in your own name. That's part of a
Not
syndication.
directly. Correct. Correct.
All right, and how do you feel about the legal protections, or what are the legal protections when you invest in a syndication overseas? Are there any, or is it just
That's
based on the local laws?
that's a good question. I think so. The way it worked is that it's an US based entity, right? So our protection is by the US laws, but again, of course, the property is overseas, so you'll have to adhere to local laws as well.
Right. And I guess it would be hard if something went wrong and the sponsor just ran off with your money, it would be hard to enforce any of those. Yeah.
Yes.
But it was filed with the SEC in the US as like a
Yes,
506B or a 506C
correct. It
syndication.
was 506B. Sorry,
Interesting.
506C. It's an accredited investor, so 506C. Yeah, and it's a famous US syndicator as well. Of course, I don't want to take the name here, but
Yeah, fair enough.
he's pretty famous. But as of now, there are no condos.
Yeah, you're still waiting on those condos to be built, huh?
Right, right.
Yeah, I mean the only thing like that that I'm aware of, there's a guy who I don't know him, but I've chatted with him once or twice on the phone and exchanged emails with him. He's in Argentina and he has launched a crowdfunding platform open to US investors where you
Hmm.
basically buy fractional ownership in vacation rentals in Argentina. Um, Argentina being an attractive market for that because they've had such crazy inflation over the last few years. It's
Yes,
really hard to get a loan there. So if you can't finance properties with a mortgage, or at least if it's really hard to finance properties with a mortgage, that compresses prices, right? So,
right, right.
relative to rents. So, anyway, again, I feel like we're going down a little bit of a rabbit hole with international real estate, but it's something I'm personally very curious about. I would love to diversify my real estate investments overseas as well, but I'm also cautious about it, without some of those protections in place that we get in the US. So as
Right.
investors. So now I understand that you have been working closely with your children on some investments with them and both as wealth building tools and as teaching tools. So I'm curious to hear a little bit more about that. What are you working on there as far as working with your
Sure.
kids?
It's very exciting, and it's like passion for me right now to teach kids about money and investing and finance. Again, I don't come from that background. I'm an IT engineer, right? Um, but I have been running business for my IT side since 2010, and come pandemic, everything shut down, right? My kids were at home, and they kept asking me, "How do you make money?" Right? So I started telling them the same thing which my dad told me when I was growing up: money does not grow on tree. You got to work, right? So that story just continued, and then I started talking to them, and then I ordered, cash flow quadrant game,
Oh, there you
um,
go.
Monopoly, lots of games, and I would work, and they will be sitting behind me, and they'll be playing, and I'll play also at the same time. So when I saw that they are interested, then I started talking to them about stocks and real estate. I think again, you and I invest heavily in real estate, but there are people who make money in stocks as well, right? So those two are the biggest investment vehicles available to all of us. Everyone can invest in real estate and stocks. Even as little as $50. Also, you can go to crowdfunding website and buy a real estate share, or buy a fractional share on Robinhood, right, for a
Yeah.
company you love and trust, right? So I said, okay, why not? So when we started teaching them, and then I thought now they understood. And by that time, we had created a booklet. So then I promised that if you let me finish this booklet in a book, I'll make sure it's publishes, right? So last 18 months has been just, trying to finalize the book. And, we have put lots of work into getting the book published. And we are about to publish the book on May 15th, around May 15th. And actually, it's called Growing the Money Tree.
Okay. So that money really can grow on trees.
Exactly. So I showed them how you can invest, how you can save, spend, and invest, rest of your money, and it will continue to grow as long as you take care of that tree, right? You give the water, fertilizer, you wait for it. You don't start cutting the tree every 6 months or a year. You don't have to trim. You just let it grow, and you will have pretty significant portfolio in 5 to 10 years, 20, 30 years if you wait, right? So that is what the book is about. It's geared towards 8 to 12 years old, because that was the age of my kids when we started, learning about money and finance. So I thought, the book works best for those age. But even I'm pretty sure even any teenager would learn, or even any adult would learn something out of it. So we have made sure that we have covered not only stocks and real estate, government bonds, cryptocurrencies, private investments, crowdfunding, all of that I have tried to teach them, and also being a business owner. So after working through the book, they of course bought some stocks. they have their account, an Atma account on Fidelity. So they bought Tesla and Taiwan Semiconductor, and they're happy with some stocks. Of course, not happy with others. But they also then started their own business. So they started making jewelries, and they sold out in first month.
Oh, wow.
When we went to a July 4th parade a couple of years ago, and they sold out like the same day. So then they opened an Etsy store. So I was able to teach them how to build a business. And of course, I asked them not to do anything during the school year. So again, when the summer starts, they will go back and start that business again. But they are seeing, and they are all actually waiting for me to help them invest in real estate. So our goal is to buy small single family or duplex using their IRA, which they earn the money from my business.
There you go. There you go. Yeah, I was just going to ask if you and your kids have done any joint ventures real estate wise together, but it sounds like that's on the agenda for this coming summer.
Yes.
Now I have to ask, so you have syndicated deals yourself, and you are currently syndicating deals. Before we wrap up, tell us a little bit about what kinds of deals you guys are focusing on, geographically and property types, and I want to just hear a little bit more about your deals that you're focusing on right now.
Sure. So I started syndicating multifamily, and now we shifted the focus was we wanted to make sure our assets and the location which we invest in are recession resistant. Because we keep hearing this word recession for last 10 years, that it's around the corner. It's around the corner, right?
It's always right around the corner.
Hiding. Yeah, it's somehow it's hiding somewhere, right?
Winter is coming.
Yes.
And eventually it does come, right?
It does, yeah. So the broken clock is twice a day, right? At least it's right twice a day. So, so long story short, though, we shifted into recession-resistant assets, and I thought mobile home parks have good value out there. It had less competition. Of course, the competition has grown into much more because institutions have taken notice. But we started focusing on, I have a really good partner. I know him, trust him well. We have done 5 deals together. I sign on all the loans as well. So I have skin in the game, and I invest in those deals. So and from the location wise, we only focus on the Carolinas and Midwest markets. Carolinas is where my partner is, and we have pretty much have pretty solid portfolio of mobile home parks over there. And now we started growing into Midwest markets. So I think those markets will continue to be recession resistant overall because there is no boom and bust cycle. They don't go up crazy, and they don't fall flat fast either, like markets like Phoenix and San Francisco Bay Area and
Right.
other crazy markets. And even Florida is struggling right now, as we see, because everyone thought, oh, we'll start building like crazy because people are moving here, and then suddenly the trend has stopped. And Austin, same thing, in a year lost like 15 to 20%, and it was gaining 40-50% on real estate properties, right? The house is single, and now it dropped 15 to 20% a year over year because they just over constructed. They continue to build. So that is why. And the beauty of mobile home park is that cities don't approve mobile home parks anymore. So the mobile home parks we have, that's it. It's like Bitcoin. You are not going to get any more Bitcoin. It's a finite resource. And on top of that, people and the large institutions want to buy those land and convert them into whatever, shopping centers or apartment buildings. So I love that asset type. And the second is senior housing. As of this year, it's called Silver Tsunami. So we are going to have the baby boomers would be the largest population base as of this year. That means they need place to stay. They need place to enjoy. And so I think, by investing or building senior housing facilities, we not only will make money, but we'll take care of our adults. And so we constructed one senior housing facility in Iowa. There are 2 we are converting. We are converting a motel in senior housing in Arizona, Tempe, and as well as in Connecticut. So yeah, we are working hard on those as well.
Interesting. Yeah, so I've invested in a handful of mobile home parks myself, and like you said, it's a great asset class. They're not building any more of them. It's the only type of property
Yes,
in the U.S. that's shrinking in number every year rather than
exactly.
growing. Uh, and it's the ultimate affordable housing, right? So, it's pretty
Yes.
recession proof. So Alpesh, how can people connect with you if they want to invest with you, if they want to listen to your podcast, if they want to buy your book? How can people connect with you?
Sure. So my website for my real estate syndication business is www.wealthmatters.com, or they can email me Alpesh at wealthmatters.com. And the website for the book is going to be moneytreebooks.com, moneytreebooks.com. And we already are on all the social media actually. So if you type in Growing the Money Tree on Facebook, LinkedIn, Instagram, TikTok, you'll see us.
That's great. Alpesh, thank you so much for coming on the show. This was a lot of fun.
Thank you, Brian. I really appreciate it. Thank you.
Absolutely. And if you enjoy these conversations that we have, please, please, please rate, review the show. It makes a world of difference to us. And on that note, we will catch you guys next week, same place, same time. Have a great one.
Like the idea of diversifying into real estate, but don't want the headaches of being a landlord? Enter passive real estate syndications. You buy fractional ownership in apartment complexes and other large-scale properties. Earn your share of rental income and your share of the profits when the property sells. In fact, most of the syndicators we've invested with have average returns over 20% per year. You even get full tax benefits, including accelerated depreciation. Even as you collect distributions in real life, you often report a loss on your tax return. So why doesn't everyone invest in real estate syndications? First, you typically need to know the syndicator to invest, and the minimum investment for each property is high, usually $50,000 to $100,000. That's a lot of money for a single investment, which is precisely why we formed an investment club to pool funds and invest together. Every month, we propose a new deal in the co-investing club and vet it together on a group call with the syndicator. Each deal is purely optional. Pass or invest as you like. As for us, we invest our personal money alongside you in every single deal. If you want to invest like the 1% without actually being a 1%er, join Spark Rentals Co-Investing Club. Email us at support@sparkrental.com with questions, and we look forward to investing alongside you.